Hello Wolfpack, today we have a very important video and I've been meaning to do a video on this topic for a long time and this is a video regarding Bitcoin over the course of its history since 2010 on the Bitcoin index in relation to the DXY. I have this chart up here on the DXY and I have this chart on Bitcoin. I've lined it out on a line graph to make it a lot easier to look at, and the same thing on DXY here. So we've adjusted these to the relevant time frames and we've actually started this at the halving, and so anything before 2012 is irrelevant because anything before 2012 Bitcoin was pretty much tiny, too small to have any impact on any traditional market. It's even debatable as to whether it would have that impact in 2012 to 2013, but let's just leave it at that. That's when the halving began. That's when Bitcoin really started picking up momentum, and so we'll leave it at that. And this is going into the correlation between the DXY and the Bitcoin chart, and ultimately leading to the conclusion, if you don't want to watch the whole video, leading to the conclusion that the DXY is a chart you should be looking at very closely if you were even somewhat involved in cryptocurrency, if you're even somewhat curious as to where Bitcoin will be going within the next, say, 6 to 12 months, okay? The DXY is incredibly important. Now, what is the DXY? I say it a lot. The DXY is a chart that essentially, at its core, measures the strength of the US dollar in relation to other global currencies, right? Strong global currencies. And that's what it is, right? So if it goes up, it means the US dollar is gaining against those currencies. If it goes down, it means it's losing value against those currencies. Currently, it is in a bit of a short-term uptrend after a long-term consolidation period since 2015, okay? And so, well, what is the correlation? And a lot of people would ask, and there is a reverse correlation. So generally speaking, and I'll show you the evidence in a second, when Bitcoin goes up, the DXY is going down. When the DXY goes up, Bitcoin is going down, right? So let's look at the correlation now. Well, starting in May 2012, we had an uptrend on Bitcoin in which we went from about $5, right? Tiny, to $1,200, okay? So that happened from May 2012 to November 2013. What happened to the DXY at that point in time? The DXY went down 3%, okay? Bitcoin was very small at this point, so you can't expect too much of a radical change. But the point is, at that point, we still went up on the Bitcoin chart, and the DXY went down. There's that reverse correlation, okay? So that could be a coincidence. Let's look here again. So we have November 2013 to January 2015. We went down on Bitcoin from the all-time high in 2013 at 1,200 all the way down to around $200. So we went down on Bitcoin from November 2013 to January 2015. The DXY went up 17% in this period of time, massively. Reverse correlation, again, that's a little bit more evidence. You could say, well, it's still a little bit of a coincidence. Bitcoin was too small at that point in time. Okay, so let's look at 2015, okay? So we can see from January 2015 to December 2017, Bitcoin went up from 200 USD to 20,000 USD, really making its mark on the financial markets and becoming basically common knowledge at that point, right? In 2017, late 2017, by that point, a lot of people, probably the majority of people in Western countries at least, knew about Bitcoin, knew about cryptocurrency, okay? So let's look at that again. So January 2015 to December 2017, okay? What happened in that period of time? Right, it was a long period of time. We ultimately went down 6% on the DXY, so we entered a downwards trend. So again, we went upwards on Bitcoin, downwards on the DXY. Now we had a bear market from 2017 December to 2019 January, okay? And in that period of time, we pumped up 7% on the DXY, which is a massive gain, okay? And then we had another bull market here from January 2019 all the way through to October 2021, in which time we lost around 2% on the DXY, okay? And if you were taking it from, because basically, I mean, it was almost a double top formation, and if you were taking the top from the April high, you're looking at a 3 to 4% loss, okay? So point is, we still went downwards on the DXY while Bitcoin went upwards, and now, just to top it off, so we've had so far 1, 2, 3, 4, 5 correlations, direct reverse correlations that are kind of undeniable at this point. And then to top this off, ever since October, we've been going down on Bitcoin. The DXY is so far up 3.36%. Okay, so there is the evidence of a reverse correlation between the DXY and Bitcoin. And since the DXY right now, and this is the DXY, again, I've just changed the chart up and we're looking at a longer term scale. And actually we can zoom in now. We can go to the daily chart of the DXY. Now the DXY is heading upwards in an ascending wedge formation, which is typically a bearish formation, right? Against strong resistance, this red resistance box that's played out since basically the 90s, okay, or the 80s. So very strong resistance, heading upwards against it. Russia has declared war on Ukraine. That has led to a bit of a pump on DXY even further. We are in a strong period of consolidation within this wedge, running out of space to move. Why is this important? Well, it's important because interest rates are being potentially risen on March 15th, okay? And with this wedge running out of space to move, it means we're probably going to be making a move due to one of these major macro events, either downwards or upwards. And given the fact that Bitcoin is in a bear market and we have that strong correlation in the past 5 times, right? And Bitcoin's heading downwards, this thing is likely to move upwards. Not only that, but when interest rates go up, especially in times of this kind of volatility, we usually see the DXY go up at least a little bit. And so since we've constantly permanently retested this resistance, right, we're showing no signs of slowing down, constantly bouncing off bull market support. Although TA is kind of irrelevant with things like this, it does work to a certain extent, and I would be bullish after a macro double bottom on the DXY. And seeing as I'm bullish on the DXY, I think the DXY is going to go up. It's not that easy to say, though, because there is a lot of events you need to take into account. But the point is, it looks generally bullish. Naturally, you have to be generally bearish on Bitcoin. And given the fact that I'm generally bearish on Bitcoin due to Bitcoin's TA, I naturally have to be generally bullish on the DXY. And hence, given the fact that, well, the DXY has typically moved upwards when Bitcoin moves downwards and throughout history, right, on 6 different occasions, I have to be bullish on the DXY and I have to be bearish on Bitcoin. Okay, so that's why the correlation matters. And that's why everyone should be looking at this chart right now, go on TradingView, set it up the way I set it up. Look at the fact that we are literally a millimeter away from breaking upwards out of this wedge or breaking downwards below it, depending on what happens. And look at the longer term impact on a macro, larger scale that is typically had on Bitcoin. The reverse correlation is undeniable. It is there. It is not a coincidence. And it's something we all need to be paying attention to. We cannot, we can no longer, disregard the situation on Bitcoin as just a bear trap, right? We've gone down 52% from all-time highs. Nothing is really looking too good now on the macro and even on the TA itself. So look, it's another thing you got to look at. We'll bring it up basically daily until that resolves, because I don't think it's going to take long to resolve now. I think the latest this could possibly resolve is around March, late March, after that interest rate decisions. I can't see how this would remain stable during a decision that massive. And so look, let's wait and see on these 16 days till March 15th when that decision is coming through. This just goes to show the reverse correlation is very much prevalent. We need to be watching it. Thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next video.